In this video, I'm going to prepare a schedule of cost of goods manufactured for Acme Company for 2017. Acme Company manufactures drones. For the year ending December 31st, 2017, the following accounting information is gathered from the accounting records. Beginning direct materials inventory of $80,000. Ending direct materials inventory of $125,000. Direct materials purchases of $940,000. Direct labor of $770,000. Indirect factory labor of $220,000. Insurance on plant equipment of $50,000. Depreciation on plant equipment of $20,000. Depreciation on office equipment of $15,000. Plant utilities of $15,000. Office utilities of $8,000. Property taxes on plant of $18,000. Property taxes on offices of $14,000. Beginning work in process inventory of $130,000. Ending work in process inventory of $90,000. The schedule of cost of goods manufactured involves calculating the direct materials, direct labor, and manufacturing overhead used in the manufacturing process during the period, plus the beginning work in process inventory and minus the ending work in process inventory. This is similar to the cost of goods sold calculation used for a merchandising company, but does involve a few more steps. I'll start with the report title information, which is the company name, Acme Company, on the first row, the report name, Schedule of Cost of Goods Manufactured on the second row, and the time period covered by the report for the year ended December 31st, 2017 on the third row. The first thing to account for is the direct materials used during the year in the manufacturing process. This is calculated by adding the beginning direct materials inventory to the direct materials purchases, which gives me the direct materials available for use of $1,020,000. From that, I subtract the ending direct materials inventory of $125,000 to arrive at direct materials used of $895,000. To make sure I don't miss a cost or use any twice in my calculations, I am highlighting in yellow each cost as I include it on the report. Next, I account for the direct labor, which is $770,000 for the year. The third element of product cost is manufacturing overhead. As I look at the list of costs, there are costs identified for the plant and for the offices of Acme Company. For the report, I must identify those costs that are product costs and include those, being careful not to include period costs. For this company, the plant-related costs are product costs and the office-related costs are period costs. To make sure I don't include period costs, I am going to mark the period costs. As I review the list, I find that depreciation on office equipment, office utilities, and property taxes on offices are period costs. The other costs, from insurance through property taxes, are included on the report. Total manufacturing overhead costs are $323,000. Next, I total the manufacturing costs incurred during 2017 by adding direct materials used, direct labor, and total manufacturing overhead costs to arrive at $1,988,000. To this total, I add the beginning work in process inventory to arrive at total manufacturing costs of $2,118,000. In the last step, I subtract the ending work in process inventory of $90,000 to arrive at cost of goods manufactured of $2,028,000. The cost of goods manufactured is used to calculate cost of goods sold on the income statement.